Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule of events for Friday, the 22nd of January. Well, once again, the ECB meeting surprised analysts. In December, everyone expected them to be more dovish than they were. In January, very few people expected them to be as dovish as they were, or expected Draghi to be as dovish as he was. ECB President Draghi took a leaf out of his predecessor's book and said that the ECB would have to remain vigilant. His predecessor as ECB president, Jean-Claude Trichet, always used that word to alert people that they were likely to take some policy action at the next meeting. So now we've been officially notified that at the March meeting, they're likely to revise down their economic forecast, or at least their inflation forecast, based on lower oil prices, and ease policy further. So even if the Fed stays pat, it looks like monetary policy divergence is alive and well, and Eurodollar can move lower still. As for today's indicators, the preliminary market PMIs for January for France, Germany, the Eurozone, and the US will be released over the course of the morning. These are the first major indicators for the new year, and as such should be closely watched. Until recently, the surveyed data in Europe has been stronger than the actual data, but it looks like this discrepancy may start to be rectified. German and Eurozone manufacturing PMIs are expected to decline slightly. That could add to doubts about the Eurozone economy following Draghi's comments that downside risks have increased again, and could prove negative for the euro, especially if the US PMI comes in a bit higher as expected. Investors, too, must be vigilant. Also at 9:30 GMT, we get UK retail sales for December. The recent slowdown in wages growth recently may limit the scope for sales to rise. Expectations are for a month-on-month decline in sales, which could add to the slowing UK economy theme and depressed sterling. Then at 1500 GMT, the US announces existing home sales for December. Their forecasts show a solid increase to a 5.2 million annual pace from 4.76 million. However, most of the December housing data announced so far has been disappointing. Housing starts in particular fell below the previous month's levels, which was amazing considering that it was the warmest December on record. And building permits also fell. The National Association of Home Builders Housing Market Index also slipped a bit. Housing in general has been performing well within the generally slowing U.S. economy. A good figure today could prove positive for the dollar if it counters some of the downbeat view from the other December housing data. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.